students, hope you are well and working hard to achieve your goals. So again, welcome to the commerce class. So as we had started our chapter 7, formation of a company. In this chapter, yesterday we had discussed the promoter, its meaning, definition, rules and functions, legal status and types of promoters. And in the basic documents of a company, we had discussed memorandum of association. So today we will discuss our next topic, that is association, articles of association, its meaning and definition, contents of articles of association. Then we will discuss the difference between memorandum and articles of association. After that, prospectus, its meaning and definition and contents of prospectus and disclosures as per SEBI guidelines. After that, we will discuss shelf prospectus and red herring prospectus, and the last one is minimum subscription that today we are going to discuss. So first of all, we will discuss some key terms that today we are using. So first one is prospectus. So a prospectus is a formal document that is required by and filed with the Securities and Exchange Commission that provides details about an investment offering to the public. Means what are the investments that are offered from the company to the public so that they can arrange the money for their business. Next is shelf prospectus. So shelf prospectus means a prospectus issued by any financial institution or bank for one or more issues of securities or class of securities specified in that document. It enables public financial institutions and banks to raise capital from the public more than once without issue of fresh prospectus every time. Means raise capital or money from public more than once without offering or without issuing a fresh or a new prospectus every time. So this is called as shelf prospectus. Next, there is a red herring prospectus. So red herring prospectus is a prospectus which does not have details of either price or a number of shares being offered or the amount of issue. So it is just an incomplete prospectus that is called as red herring prospectus. Next, there is the articles of association. So it is an articles of association. It is an sample of Technologies Limited Company. So it provides the basic aim, register place, fiscal year and some general announcements, and after that they provide rights and duties of the company. So articles of association is a company's essential rule book which contains the set of guidelines and regulations necessary for every company to function. It provides the rights and duties of directors and shareholders, rules relating to the general meeting, accounting, transfer of shares, winding of the company is also mentioned in the articles of association. Next, our term is underwriter. Suppose a person has a job to sell all the shares of the company, but in case of unsold shares, he is responsible to buy those shares and in return he gets salary for this purpose. So a person, a bank or any other financial institution that pledges to buy all the unsold shares is called underwriter. Next is shares. So an example of share is when you are entitled to half or 1/3 of the property. So share is a portion of something to which you are entitled or for which you are responsible. That is called as shares. So next is shareholder. So an owner of the shares is called a shareholder. He contributes money in the company. Next is dividend. So a sum of money paid regularly, typically annually, by a company to its shareholders out of the profits is called a dividend. Next is allotment of shares. So for example, company first manufactures mobile phones only and now wants more money to expand its business and produce laptops, computers, tablets also. So the company issues shares so that they can arrange money. So share allotment is a creation and issuing of new shares by a company, and new shares can be issued to either new or existing shareholders, and it is governed by the Companies Act 2013. That is called a allotment of shares. Next is forfeiture of shares. So for example, forfeit means to lose, or to lose, to do, or having something because of you have broken the rule. So if a shareholder fails to pay the installments of his shares at the time the company as a penalty forfeit his right of shares, it is called the forfeiture of shares. Likewise, another term is surrender of shares. So sometimes a shareholder cannot pay any installment of shares. Then surrender of shares means the return of shares by the shareholder to the company for cancellation. That is called the surrender of shares. Means forfeiture of shares is done by the company, but surrender of shares is done by the shareholder. That is the difference between these two terms. Next is line of shares. So for example of a line is a bank holding the title of a car until the car loan has been completely paid. Line is a claim on a property as security to make sure someone repays money they have borrowed. So in the case of a company line on a share means the member would not be permitted to transfer his shares unless he pays his debt to the company. Next is share certificate. So a share certificate refers to a document which is issued by the company evidencing that a person named in a share certificate is the owner of the shares of the company as stated in the share certificate. Like equity shares each of rupees 10, amount paid per share is rupees 10. So this is called as a share certificate. There it is properly stamped and properly there is a name are also mentioned. So this is a sample of Reliance Industries Limited of a share certificate. Next is minimum subscription. So for example, if a person wants to open a grocery shop, he needs money for purchase of groceries, to pay the rent of shop, salary to employee, electricity bill and furniture. So this is the minimum money that he arranges before going to start a shop. So this is the minimum subscription. So we can say that minimum subscription is the minimum amount that must be raised by the issue of shares so that the company has necessary funds to carry out its objectives of the company. That is called the minimum subscription. Next is calls. For example, suppose a shareholder of the company takes 100 shares of rupees 100 each. Means 100 multiplied by 100, 10,000 shares. Then he pays rupees 5,000 at that time and rupees 5,000 he said to pay later. So calls means a call may be defined as a demand made by the company on its shareholders to pay a part or the whole of the unpaid balance within a specified time. So 5,000 is a call by the company that is done to its shareholders so that they can pay that amount within a specified time. Next is call in arrears. So calls in arrears are the situation when the shareholder fails to pay the called money in the allotted time by the company is called calls in arrears. Next there is a calls in advance. So when the shareholders pays excess amount, then it is called a calls in advance. So that means excess money received by the company by its shareholders which has been called up is known as calls in advance. So next is articles of association. So this is an sample of articles of association. So the articles of association of a company contains the rules and regulations relating to the management of its internal affairs. The articles must be printed, divided into paragraphs, numbered consecutively, stamped adequately, signed by each subscriber to the memorandum and duly witnessed. Next, The articles of association, it has various contents like directors, auditing of a company, voting rights, share capital, conversion of shares into stock, winding up of a company, journal meetings, line of shares, transfer and transmission of shares, forfeiture of shares. So these are some contents that are to be mentioned in the articles of association. So first content is the articles usually contain the following matters like exclusively, wholly or in part of a table A. So it includes types, number and classification of shares and the rights attached to it of the shareholders. So the amount of minimum subscription, then procedure for making calls, that the amount is unpaid should be get by the shareholders. Then procedure for allotment of shares, the new shares they are or they want to issue. Procedure of issue of share certificates and share warrants. Procedure of forfeiture, reissue and surrender of shares. Method of forfeiture of shares. Procedure of change in share capital. Method of verification of preliminary contracts. Borrowing powers of the company. Next, it mentioned that procedure of the payment of to the underwriters, procedure of conveying and conducting meetings, voting poll or proxy. These are some points that is to be mentioned in the contents of articles of association. Then declaration of dividend or money and capitalization of profits to its shareholders, books of accounts like profit and loss account or balance sheet and their auditing, how it should be done. Then appointment of and remuneration means salary to its auditors. Then rules related to the appointment, reappointment, remuneration, reward of the directors. Then rules regarding use and custody of common seal. Rules and regulation regarding conversion of a fully paid up shares into stock. Interest rates on call in advance and call in arrears. Then line of shares, rules regarding winding up of the company. So these are some contents that are to be mentioned in the articles of association. So next is difference between memorandum of association and articles of association. So first difference is content. So in the memorandum of association, it contains rights, privileges and powers of the company. It is called the charter of the company and is regarded as the constitution of the company. But in the articles of association, it contains the rules and regulations for the internal management of the company. Second is scope. So in the memorandum of association, it determines the relationship between the company and the outsiders. But in the articles of association, it governs the relationship between the company and its members and also the relationship between the or among the members themselves. Next is superiority. So in the memorandum of association, it states the objectives for which the company is formed. But in the articles of association, it states the methods by which the objectives stated in the memorandum are to be achieved. Next is subordination. So in the memorandum of association, the provisions of the memorandum are subject to the Companies Act, but in the articles of association, articles are governed not only by the Companies Act but also by the memorandum of the company. Next is alteration. So in the memorandum of association, any alteration of the memorandum must be approved by the shareholders and confirmed by the company law board. Thus, it is very difficult to alter the memorandum of association. But in the articles of association, the articles can be changed by the shareholders. There is no need of confirmation by the company law board. Thus, it is easier to change the articles of association. Next is necessity of filing. So, memorandum of association, memorandum must be prepared and filed by the every company. But articles of association, a public limited company may file its articles of association. There is no need for the private limited company that they file the articles of association. Next is fundamental charter. So the memorandum of association, the memorandum is the must or is the fundamental charter of the company, but articles of association, the article of association is a subsidiary to that charter. Next is objectives of company. So in the memorandum of association, the memorandum lays down the objects of the company, but in the articles of association, the articles cannot go beyond the objectives stated in the memorandum. Ninth difference is relationship. So memorandum of association defines the relationship between the company and the outside world, but in the articles of association, the articles cover the matters pertaining to the internal management of the company. Means articles of association relate with the internal management and memorandum of association relates with the outside world. Last difference is basic powers. So in the memorandum of association, memorandum lays down the basic powers identified with the company named therein. But in the articles of association, the articles describe the manner in which the company is to function or to implement the objects and exercise their powers mentioned in the memorandum. So this is the difference between the memorandum and articles of association. So next are basic document of a company that is required is prospectus. So a prospectus is a formal document that is required by and filed with the Securities and Exchange Commission that provides details about an investment offering to the public. So the contents of the prospectus are: the Companies Act requires that the prospectus must state the matters specified in Schedule 2 to the Companies Act. Some of these matters are given below, like first one is name of the registered office of the company, the main objects of the company, name, addresses and occupations of signatories. Signatories means shareholders to the memorandum and the number of shares subscribed to each of them. Then the number and classes of shares and the rights and privileges attached to each class of shares. After that, names, addresses, occupations, qualifications, shares if any, and the remuneration of directors are to be mentioned in the contents of or in the prospectus. Next, contents of any contract relating to the appointment of the managing director or manager and the remuneration payable to them is also to be mentioned. Then the minimum subscription or a minimum amount with the amount payable along with application and allotment on each of the shares is also to be mentioned in the prospectus. After that, the time of opening and closing of the subscription list, the amount of premium and discount and underwriting commission if any on issue of shares, then the name of underwriters if any, together with the statement by the directors that the resources of the underwriters are sufficient to discharge their obligations. This is to be mentioned in the prospectus. Then the date and modification of redemption of shares, particulars of any property to be acquired by the company. After that, the names and addresses of the company promoters and the consideration paid or to be paid, the name and addresses of auditors, the main particulars of every material contract, full particulars of the nature and extent of the interest of every director or a promoter in the promotion of the company and in any property to be acquired by the company is also to be mentioned in the prospectus. After that, some restrictions are to be mentioned, like if any relating to the membership rights, like right to vote, attend and speak at the meetings of the company or the winding up of the company. So these are some restrictions that are to be mentioned in the prospectus. So next, particulars of any property acquired within 2 preceding years in which any director or promoter was interested, details of shares issued and allotted if any within 2 preceding years, and if the company has been carrying on such business, the period during which it has been carrying on such business, the profits or losses within last 5 years and the dividend declared should be mentioned in the prospectus. So these are some contents that are to be mentioned in the prospectus so that it is easy to get offerings from the public. Next is shelf prospectus. So this is a sample of shelf prospectus. So under section 31 of the Companies Act 2013 deals with shelf prospectus. which the company is supposed to file with the registrar at the stage of first offering of securities, which shall indicate a period not exceeding 1 year as the period of validity of such prospectus, which shall commence from the date of opening. Next is red herring prospectus. So the expression red herring means the prospectus which does not include complete particulars of the quantum of the price of shares included therein. Means the amount price is not to be mentioned is called the red herring prospectus. So red herring prospectus shall be filed by the company with the registrar at least 3 days prior to the opening of the subscription list or the offer. Next and the last is minimum subscription. So this is the amount stated in the prospectus of the public limited company that needs to be collected through the issue of shares before any valid allotment can take place. So the minimum amount should be stated to cover the following expenses like purchase of shares or purchase of fixed assets, payment of underwriting commission, initial working capital, that is the amount needed for the payment of regular expenses that occur in the normal course of operation. So this is called the minimum subscription. So this is all about today's topic. So now you have to write the question answers. So your first question is, explain the contents of the articles of association of a joint stock company. Second, distinguish between memorandum of association and articles of association of a company. Third question is, what is meant by prospectus of company? Is it compulsory to issue a prospectus? So go through the various links so that you can write the answer of this question.